On to exercise 8.3. So once again, income statement. This one is fairly similar to 8.2. Not a whole lot more difficulty in this one. So we have Batman and Bowler Specialist Cricket Coaching Clinic. So they're providing this as a service, so a coaching clinic. At 1st October 2016, the fund's balance sheet showed owner's equity of 39,400. So likely, we're probably going to highlight this as I'm guessing they're going to ask us for a owner's equity section like they did in 8.2. Owner has provided the firm's statement of receipts and payments for October 2016. So what do we have here? So coaching fees. So you can pretty much already go through. They're going to ask you to provide an income statement. So we clearly have coaching fees as revenue. GST received, so similar to 8.2 or 8.2, yep. Not a revenue. Interest on investments. So that is interest, I guess, you're earning in a sense because although it's not, I guess, a part of the business, they're not a banking firm, but they are providing a money in the bank, and as such, they are earning interest, so that will be revenue. GST refund, no. Loan ANZ, also not going to fall as a revenue. What about our wages as expenses? So yes, wages, drawings, 8.2, once again, no. GST paid, no. Electricity, yes, because you're in the running of the business. Insurance, yes, because you're going to need insurance when running a coaching clinic if someone breaks their leg, whatever it is. Rent, yes, expense. Accounting fees, so are accounting fees an expense? Yes, because pretty much whenever you see fees, it's going to fall under revenue or expense. Coaching fees, clearly a revenue because it's coming toward us. Accounting fees, clearly an expense as it's money going out of the business. Interest on loan, is that going to be a expense? So we looked at loans. So we know that loans aren't an expense, but interest on the loan is an expense. We have cash surplus bracket deficit of 1,955. Bank balance that's at 1st October 2016, 500. And bank balance at the end, is 1st October 2,455. So A, prepare an income statement for Batman and Bowler for October 2016. So here's nicely. Alright, so we've already got our revenues worked out. So coaching fees are going to be and coaching fees 6K. GST received, no. Interest on investments, yes. And $600. 150. 150, and total will be 150. Other expenses. So now we're lessing our revenue less our expenses. Wages, yes. 4,200. Drawings, no. GST paid, no. Electricity, yes. Yes. 400. Insurance. Rent, yes. 2K. Accounting fees. And that was for 800. And interest on loan, yes. Interest on loan for 100. And what is that total? I'm going to put that in a calculator. Seven 750. So profit or loss, let's go. And we are in a deficit of $1,600 because our revenue less our expenses, so therefore we've made a loss, so net profit loss. So net profit slash loss, and we have in fact made a loss for October 2016. Explanation. Referring to your answer to part A, explain your treatment of interest on investments. So refer to, I guess, when you're explaining these, you'll be explaining, I guess, what did we treat it as. So we treated interest as a revenue in this answer. So what is interest? What is revenue? Put that. So inflow, economic benefit. You'd also be mentioning that, I guess, it's not in the general course of the business's operating. So although it's once again not a bank, it is, I guess, an inflow, and the business putting money into the bank does expect some benefit from putting their money in the bank. They do expect some return, so it does actually fit the criteria of revenue. So pretty much put in definition and why it fits that definition. Drawings. So how do we treat drawings? We didn't treat it as anything to be put into the income statement, but you'd want to state why we didn't put it in and why it doesn't meet the criteria of an expense. So we'll be once again referring to the definition of an expense being consumption of an economic benefit, which I guess is not drawings. It is a consumption in a sense, but actually we haven't really consumed anything. It does, I guess, decrease our assets and decrease our owner's equity, like the example of capital contribution in 8.2, but it just doesn't fit the criteria. Let's see. Explain 2 reasons why Batman and Bowler suffered a loss despite generating a cash surplus for October 2016. So pretty similar once again to 8.2. Why did they suffer a loss even though this is all looking peachy? So we'll be going up into, I guess, here into our receipts and payments, and I guess seeing what items didn't go across to the income statement, which impacted on our overall result. So what didn't come across? So generally there's a few things, but let's probably look for, I guess, your big ticket items. So for example, GST refund 2,300, we didn't bring that across, so that is going to significantly impact the cash at bank, but it's a receipt, not a revenue, and it hasn't flown across into our income statement, so it's not going to be impacting our net profit. Let's see, what is our next one? And it is our loan. So that's another big item that has not come across. So our loan of 2K, once again, receipt, not a revenue, and that has, I guess, significantly impacted us because although it's impacted our bank balance, it hasn't flown across into our net profit, and I guess that therefore we have suffered a loss even though we've got a cash surplus. D, show the owner's equity section of the balance sheet of Batman and Bowler as at 31st October 2016. Cool. There we go. So pretty similar once again to 8.2. So we need to, I guess, look at, so I mentioned owner's equity earlier, so it was provided to us, the 39,400. That will be our starting point. Capital and 39,400. But there's not much else in here to add in to, I guess, our our owner's equity column in our balance sheet. We will be putting in drawings. However, there's something we need to add in that we didn't add in the other one. Well, we did, but instead we actually included it in our other one. So you'll notice up here, got our capital contribution owner's equity, and we added in our net profit. I didn't put add, but we did add in our net profit. In contrast, this one, we actually made a loss here. So we need to, I guess, put in this less. Oops. That is the wrong balance sheet. Why does that say Christie's Car Clean? I'm so confused. Alrighty, anyway, let's see if this will work out. I think it should be right. October 2016, so that's Jan 2016. What if we go down a little? Oh, let's go to here. So let's put in that again. So we've got our owner's equity, 39,000. The capital, 39.4. And once again, we had a net loss, wherever that is. So we had a net loss of 1,600. So I need to now less net loss. So that's a net loss and not a net profit. Remember, that is a big difference, so don't put in net profit and have brackets because it is wrong. It is a net loss, and that was for 1,600. We need to put in our total here, 378, and lastly, we need to less out our drawings because they need to be taken out because the owner took money out, and that is for 1K. And that gives us 3,6,800. Yes. So that is our owner's equity there. So we've got our capital, which was provided to us. We need to put in our net loss, so less that net loss, which gives us 37,800. And we need to less the drawing, so money taken out of business, and that gives us our owner's equity section of the balance sheet. So that is 8.3. Hope that made some sense. I did probably have a bit of a mental mind dump in B and C, but hopefully it makes some sense. Cool, thank you.